Now that we've looked at the daybooks or books of prime entry, such as the sales daybook, purchases daybook, and the cash book, we're ready to move into the next stage of bookkeeping, the general ledger. This is where transactions are summarized and categorized to show the financial position of the business. The general ledger is the central record of all financial transactions. It includes assets, liability, equity, revenue, and expense accounts. Think of it as the master book that contains a summary of all financial activity. The general ledger forms the basis for preparing the trial balance and eventually the profit and loss account and balance sheet. Subledgers, also called subsidiary ledgers, keep the detailed transactions for specific accounts. They support the general ledger by showing how each total is made up. The sales ledger shows each customer and what they owe. The purchase ledger shows each supplier and what we owe them. The general ledger holds the totals, and these subledgers hold the details. Prime entry books are cash book and petty cash book. The cash book records all cash received and spent, and the petty cash book records small day-to-day cash expenses. The receivables ledger, called the sales ledger, keeps track of money owed to the business by its customers. Each customer has their own individual account. Whenever goods or services are sold on credit, that transaction is posted here. When customers make payments, their accounts are updated to reduce the balance owed. In summary, it shows who owes the business money and how much. The payables ledger, also known as the purchase ledger, is the opposite of the receivables ledger. It records money that the business owes to its suppliers. Each supplier has an individual account. When the business buys goods or services on credit, the amount is recorded here. When payments are made to suppliers, the balances are reduced. This helps the business manage its liabilities and cash flow effectively. The cash book records all money received and paid out of the business, whether through physical cash or through the bank. It often serves a dual role. It acts as a book of prime entry, where transactions are first recorded, and it also functions as part of the ledger system because it contains the actual cash and bank accounts. You'll usually see two main columns: receipts, debits, showing money coming in, and payments, credits, showing money going out. The petty cash book is used for recording small, everyday payments, such as postage, stationery, or minor office supplies. It's controlled by a system known as imprest, where a fixed amount is kept in hand. When small expenses are paid out, the total is reimbursed to bring the balance back to the original imprest amount. This makes it easy to monitor and control small cash transactions.